Hi everyone. Today, we're unboxing something a little different. We're not talking about the latest sneakers or anything else dealing with fashion. Today, we are diving into something that might sound a little adult. We're talking about life insurance. I know, it may sound complicated, maybe even a little boring. But trust me, understanding this stuff now is like getting a super rare pair of kicks for retail. It's a major win for your future self. We're going to break down a specific type called permanent life insurance and figure out if it's really the grail that some people say it is, or if it's just a bunch of hype. So why are we even talking about this? Well, life insurance is basically a financial safety net. It's a promise from an insurance company that if something happens to you, they'll pay out a sum of money to the people you choose, your family, your kids, whoever you want to look out for. It's about making sure your loved ones are taken care of financially if you're not around anymore. It's one of those things you hope you never need, but having it brings a certain peace of mind. It's like having the ultimate insurance on your most valuable sneaker collection, but for your life. Now, there are different kinds of life insurance out there, and it can get confusing fast. It's like trying to tell the difference between a home in Chicago and a home from across the street. They may look similar, but the details matter a whole lot. All right, let's get right to it. What is permanent life insurance? In the simplest terms, life insurance that lasts your entire life, permanently, as long as you keep paying the premiums, monthly fee, yearly fee. The policy stays active. It doesn't expire after 10 years. It doesn't expire after 20 years. It doesn't expire after 30 years. Think of something that is timeless and built to last. But here's the interesting part. Permanent life insurance has two parts. A death benefit, which pays your beneficiaries when you pass away. Next, it has a cash value component. With cash value, a piece of each premium goes into a savings or investment inside the policy. So now that we know what permanent life insurance is, let's put it in the ring with its main competitor, that is term life insurance. This is the ultimate showdown, like comparing a high top to a low top. They both cover your feet, but in very different ways and for different purposes. Term life insurance is much simpler. You buy coverage for a specific period, 10 years, 20 years, 30 years. If you die during that term, your family gets the death benefit. If the term ends and you're still alive, the policy expires. No more coverage, no money back. Imagine you're 25, you just got married, you bought your first house. You want your partner to be able to pay off the mortgage and not worry about bills. A 30-year term policy would cover that. It's relatively cheap. It covers you for those critical years. It's like renting an apartment. Hit that like button and subscribe to my channel for more financial wisdom. Alright, let's break down the pros and cons of permanent life insurance. Every sneaker has its strengths and weaknesses, right? Some are great for basketball but terrible for running. The biggest pro, the headline feature, is that it lasts forever. You buy it once, keep paying, and you are covered for life. This provides a huge amount of peace of mind knowing that no matter when you pass away, there will be a guaranteed payout for your loved ones. Plus, that cash value we talked about is a massive benefit. It's a forced savings mechanism that grows over time. Another major advantage is the ability to borrow from your policy. Let's say you've been paying into your policy for 20 years and have built up a solid cash value. The biggest, most glaring disadvantage of permanent life insurance is the cost. This stuff is expensive, especially when you're young. The premiums can be 5 to 15 times higher than a term policy with the same death benefit. So after unboxing all these details, who should actually consider getting a permanent life insurance policy? This isn't a general release sneaker that everyone should have. This is more like a limited edition, high-end collab. It's for people with specific needs, high net worth individuals. They want to pass on wealth to heirs in a tax-efficient way. The death benefit is generally paid out income tax-free. This is a smart estate planning tool. Business owners can use permanent life insurance to fund a buy-sell agreement. Most young people and families on a budget might not do so. If your goal is to protect your family from hardship if you die unexpectedly, term is usually better. Term gives the most protection for the least money. Ultimately, it comes down to your personal situation. What's right for you? What's right for your family? What's right for your financial goals? Do your research. Talk to an advisor. Option A, straightforward, affordable protection for a period of time. Option B, a lifelong financial tool with built-in savings. Understand the difference and make the best call for your future. That's the real secret to financial success. Until next time.